1st of July. Happy Friday, everybody. Markets just opened up. We had some gaps in the SPY and the Qs. We'll take a look at that. Let's jump into the risk disclaimer. We know there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether in stocks, options, futures, forex, cryptos, you know the deal. Social media, make sure it's me, youtube.com/Chris Pulver. All the other handles, try to keep them consistent at Real Chris Pulver. I've got a Discord channel running now. I'll share that in the chat. It's been nice to see everybody jumping in there. You know, look, we've got, I'll show the Discord setup here. Let me go to the screen. And here is my Discord right here. So free group chat, all are welcome. You know, trading, investing, you talk Forex, talk stocks, talk options, talk futures, whatever you want to talk about, I'm happy to help. And then I've got some bots working for me, so when I post on Twitter, it pops up here, just doing some analysis, doing some blogs. You know, all asset classes are welcome. I just ask you keep it, you know, focused on trading and investing and helping each other, and it's going to be a supportive community. So if you'd like to join, I'll post that in the YouTube session, and we'll go from there. Okay, so Q sitting at 378. We had a pretty nasty day yesterday, which actually was a great day trading. This day yesterday was about a $10 move from the close from Wednesday. So Wednesday to the lows, it's $9.60. There was some pretty amazing options there. Traded some long puts on the Qs and closed out with some nice profit. I've got some covered calls today that are nearly in full profit. I've got a 388, a 385. You know, we could have the market kind of desperately making an attempt to come back. Remember, we have a big news week next week. QQQ rebalancing or NASDAQ rebalancing on Monday. FOMC on Tuesday, or I'm sorry, FOMC Wednesday. European Central Bank Thursday, and Thursday to Friday is Bank of Japan. Saw some news overnight, something about we don't want FX extreme moves on the Japanese yen, and that was the headline I read. And I see, I mean, it's not extreme, but that's a pretty volatile move. Somewhere between, you know, 3:20 a.m. and about 4:45, so about in a 60 to 90 minute period, the Japanese yen just got absolutely demolished. So crazy stuff, but leave it to the Bank of Japan to say something to speak up, and we'll see how today plays out. The market might be very interested in crossing recent highs. Yep, so that would have been nice to do that yesterday. I was actually long at the very end of the day, grabbed a quick like 20 cents to the upside, but ended up grabbing like over $2 to the downside, which is pretty exciting. So that was a good day. Good volatility, of course. We have a gap right here. We are having a gap at this open. So I'm not going to jump in yet. I mean, I'm looking to see if the bulls are really in control here. Maybe they come back in, find the intraday lower, fill this gap, and then we start making a push on the day. If that is the case, there's plenty of movement to chew into some of that decline from yesterday. All right, let me get logged into YouTube. Say good morning, everybody. I'll jump out of this restream. I think we're good there. Let's pop right in here.
What if there was a way?
And Donna, first in the house. Good morning. Ranji, good morning. FK, good morning. Mason, good morning. Chris, good morning. Ann, good morning. David, good morning. Denise, good morning. Gary, good morning. Catherine, good morning. What's up, Brad? How are you, man? Nice to see you. All right, here's my 1 hour on the Qs. 379. Let me just double check and see. We've got some unrealized covered call profits rolling in. I've got a 385. That is for today. 385. If we have just a kind of a gangbuster day, I mean, 385 is potentially doable, but that would be coming all the way back to fill the gap from yesterday. I think my 385 is in pretty good shape to let it expire worthless. Yesterday it was all the way down to 7 cents. Now it's down to 6 cents. So I think we're good on that one for a full profit. I've got a 388 for next week. Cost basis for me on the SPY is all the way down to 430. Cost basis on the Qs is down to 350. So just working aggressively with some covered calls, lowering my cost basis. We have some supply zones in here to kind of chew up if we're going to see the bulls in control. But I'll wait and see. You know, I mean, this was a pretty violent day yesterday. I posted this in my Discord channel. By the way, if you'd like to join this, I'll do that here. Create an invite. This doesn't expire. So if you're watching this recording, you can take this link in the chat. This is my Discord group. Discord group. Link doesn't expire. There you go. But I posted this in my, get out of here. This was the heat map from yesterday, looking at an evening star. That played out pretty well on the SPY. It definitely played out on the Qs. We had a really crazy day, and I think we're just kind of chewing back into that. So this is just a good indication of. So we had a bearish decision day. Let me use a different color here. So we had a bullish decision, we had an indecision, and we had a bearish decision. Okay, now typically when we put in an evening star in a higher time frame, that typically signals a bit of a top, at least in the near term. So price today might be pulling back into here and just kind of testing the integrity of this bear move. And then we look to see if there's any follow through on that next week. So if this is putting in a near term top, I would expect more bearishness and more slides lower next week, especially with the news that we do have. The Fed's message is going to change. Their hiking rate's 25 basis points. The QQQ rebalancing is likely going to it's gonna affect the big mega techs, right, or the big mega caps. It's going to affect Apple, Microsoft, possibly Nvidia, Google. Did I say Meta already? Amazon. Basically the top 5 or 6 that make up 43% of the Nasdaq right now with market cap weighted. The QQQ is going to be rebalanced to somewhere less than 40%. So I'm not exactly sure how that affects those individual stocks or the Qs. It's only the third time in history that's happened. But you go back and see when it happened, it really doesn't have a huge effect on it. Just probably pullbacks in the near term. Overall, I felt what was interesting. I saw this yesterday also on. Let's see here. Cooney, what's happening? Daniel, good morning. I saw this yesterday on Twitter. Looks like our bullish and bearish sentiment indicators became pretty greedy. Charlie Bilella had a good post on this. Click on this feller. This guy's got a bunch of great data. Let's see here. 19% companies earnings. We still have a lot of earnings to go for this last quarter. Mortgage comparison. Let me see. I just want to get some of those recent tweets. It has something to do with the bull and bear sentiment, and I think this is the most bullish that sentiment has been since like April of 2021, which is kind of nuts because look what happened in 2022. Obviously, the market melted up kind of all year in 2021. Existing home sales, active manager exposure. This must be, there it is right here. So here's the AAII sentiment survey, bulls minus the bears. Click on this picture. Getting into the greedy territory. This is the highest reading we've had since, I think you said April of 2021. So last fall, the bears outnumbered the bulls by 43%. Yeah, so the rally changed. And again, looking at where we are on the higher time frames, we're pretty much within a whisper of these highs. This large supply zone up here on the daily time frame, if the Qs are going to get up towards 400 plus and make new highs, even with this bit of a dip and pullback, which I think is healthy technically, we're still looking at, let's take this low from yesterday. Okay, so when we got up to this high, we were as close as 5.5% from the all-time highs. We have a pullback, obviously, that was about a 2% correction. So now from current price, I'll go live price right now, back to the highs, we're sitting around 8%. So if the Fed kind of pushes on this evening star a little bit more, we correct him, and you can see this. Again, healthy technical correction would be right here. Previous high gets revisited. Market continues to make higher lows. This area, we could pull back. A healthy correction is 3 to 5%. A deeper correction is going to be 8 to 10%. Anything past 10% is a little bit on the dicey side because of what the heck's going on, right? Everyone uses the rule of thumb like 20% is a bear market. If it's to the downside, 20% is a bull market to the upside. So, could we pull back deeper? Sure. But I think the market is still a buy. There's still a lot of forced buying going into equities right now. The Fed's message isn't going to change, but at the same time, I also posted this in Discord this week. I think I did this in the blog or Twitter. I don't know. Twitter, yeah, there it was. Trueflation. This is a nice little website that gives us kind of a running day-to-day update for the year-over-year inflation. And the U.S. is coming in around 2.13%. Now, we printed year-over-year just a couple weeks ago. We printed at 3%. And I will keep an eye on this one because as we come into August trading, we print for July for year-over-year. Are we in the low twos? And we know that the Fed's discussion has been we want to see inflation under 2%, right? Now, just because they're under 2% doesn't mean it's like, okay, there they go. They get under 2%, Fed's going to cut rates. It's probably not the case. They're going to continue to, make sure that they can seal the deal on this inflation stuff. But I know there's a lot of skeptics out there to see like we can't really keep this thing bottled and contained, and we can't keep the lid on at 2%. We might get sub 2%, and all of a sudden we spark back to 2.5, 3, 4%. So I think we're still going to deal with some stickier inflation in the next 6 to 12 months. Um, doesn't seem to be the case at this time, but how does that translate into stock trading? How does it translate into the markets? We'll probably have some risk appetite continue to run as inflation comes down and everything looks like it's better and better. If the markets are gunning for all-time highs, even if it seems irrational, it's still risk on. The dollar index has been a big factor. We've had a big shift in energy. I posted this yesterday as well. This is the heat map yesterday. All of your mega cap techs were taking the big hit that dragged the NASDAQ down. NASDAQ was by far the weakest index. Dow, which is our value, right? A lot of value companies in Dow, big blue chips, and lower beta stocks actually posted gains on the day. Declining, we had about 65% of the stocks down yesterday. We still have, market breadth wise, we still have a lot of buy zones out there. 74% of the public trade stocks are still above the 50 moving average, and 61% above the 200. So if you have your 50 above the 200, that's still a buy zone. So they're still buy the dip, buy the dip, buy the dip, and I think until these indices, are getting to those all-time highs, I'm still looking for overall bullishness for right now. Okay. So Qs, correction, like I said, we're at 378. See if there's a fade on that today. I'll be watching closely. I'll get my markets mapped out. Big levels on the SPY today. Intraday 455. We could fill today's gap back around 452. I'm just going to hang tight and see. I mean, the trade I'd like to see would be, 452 was the close. We gapped up towards 454. That's $2. Anything like $3, $4 to the upside. Maybe fade that. Or if we pull back to 452 and then get some buying off of that, I'd look for some price action. So I'll be watching short-term action here. This is a 5-minute chart that I watch. This is what I trade typically if I'm doing daily options. So if we, are using this intraday low, great. If we pull back to this gap low and we get some bid action, kind of a stop loss below here, I'll look to see if the market wants to stay bullish and pushing for the day. So otherwise, the opposite of that would be we just kind of hang in here, pull back a little bit for the morning, catch some bids. Maybe we're looking long for the morning, right? Closing. So next week we have a full trading week. Again, a lot of news to digest. The 31st is going to be a single day Monday to close out the month, but I think a lot of this, this is a monthly expiration. We have end of the month with all the Fed stuff coming next week, and then a Monday close. So I wouldn't be surprised if we have a lot of volatility going into the 28th, and then that 31st might be a surprising day as well, just because it's end of the month. Okay, so watching the SPYs, watching the Qs, I'll get my levels mapped out, bullish or bearish. Let's see what happens. We got some gaps all over the place. Let's talk dollar index. If you want to post some charts in the chat, go for that. QQQ top component selling off. What Donna? Do you have what are you talking about there? Top component selling off. Yeah, you're saying like the top weighted ones. Yeah, your big tech, of course. I mean, looking at this, I mean, it's not a surprise that if is this happening ahead of time? It's probably booking profits, right? I mean, Tesla, Amazon, Google, Microsoft, Meta. I mean, those are huge red, right? Nvidia's down 3.3%. Let's see where this is at. Actually, I haven't looked in this one in a couple days. We're back down to 456. I mean, this thing ran up to 480. I don't know. Maybe we get lucky on this. If there's just a ridiculous amount of volatility on Nvidia, does this thing drop, back down to $400? Do we get paid on these bear call spreads? It's still possible. We have an expiration, I think, today, or maybe it's either today or the 28th. But the 410 by 415, if I lose on that, it's fine. But we still have August, September. If we can partially manage those for profit, I'll be okay. I just think it was, we took a stab at it at a good technical spot. It just blew through with this kind of July run. But yeah, I would expect the 24th to be that rebalancing. Is going to be interesting how it plays out. And the Qs are probably going to be the most affected index and mega cap tech. Let's go dollar index. Dollar index still catching bid this week. This is what we came into Monday expecting was some dollar strength. We're back up to 101, and that big handle is 100. Now, DXY at 100, that seems to be an interim support level. And I still said, even going into the Fed next week, if we're here coming into, and honestly, like leave it to the markets to kind of put us right in that position where it's like, where do we go? Because if we're right here between 101 and 102, and we have the Fed next week, what do you think is going to happen? That can certainly happen, and that can certainly happen. And there's a lot of times where we come into these major news events, and that's really what we're looking at as a trader. Is I don't really know what to do. I don't know where to go with this. But whatever does happen, I would expect some follow through. So if the delivery from the Fed is going to kind of derail the markets a little bit and continue downward pressure on the stock market, then that catches the dollar upside. Okay, that brings gold down, that brings silver down, that brings oil down. Most likely, the dollar catches bid. Now, what's interesting is this U.S. dollar. So it's a different. This is the FXCM dollar index. This one actually held better structure. This low and this low. This one looks like we could come all the way back to the highs. And so, it's kind of the same thing. It's like, was this a wedge that broke out and this is a retest? I mean, it could certainly still fail here around 12,800, but we could also come right back in and this could be just equal low, equal high. We still have a pocket up here. We still have a yearly pivot up here. Actually, the yearly pivot on the dollar index was hit, but the DXY is still available. But I kind of need to wait and see. I think that we could pause coming into the Fed, and then the Fed settles, and it's like, what's next? And I would take that for probably most of the rest of the summer. So maybe a summer drift. Maybe that's our interim bottom on the August levels, and we just have some range trading. I mean, it is July, so July, August, and currencies especially is a lot of seasonal ranges. Okay, so we'll see what happens, but we have got to watch the dollar closely. There's just a lot of moving components with the dollar. Dollar drops, great for stocks, great for risk appetite. Commodities do pretty well. Dollar rallies, then stock market struggles. We have a little pullback, and we see risk off trading for the most part. So commodities lower, energy lower, tech probably down. It's just going to be more of that like dollar movement. Now, medium term, and even on currencies, I mean, we looked at the short this week on the pound dollar, closed that for profit. We had a lot of currency pairs getting some nice rejections. The euro dollar, how's that one doing? The euro dollar finally starting to drop a little bit better. 11.19. I know some traders were in here holding shorts. And if it comes back down into this level, if we come back test this low between a 108 109, if you're short on euro dollar, I like that area just to be safe. It might come all the way back down here, but I just wouldn't test my luck. I would at least eliminate risk and see if it wants to get here and go lower, then just trail it. But I wouldn't leave a lot of risk on the table if you're long the dollar right now. All right, looks like we're fading today's gap, coming back in towards 452. Let me look at some real-time levels here. We've got a 452, we got a 450 today. All right, I'll stay patient. I've had some good profits this week. I'm just going to hold tight. I don't need to force anything unless I get a good trade. Q's kind of the same thing. Real-time Q's coming to fill the gap. Pressure to the downside, certainly. Big levels on the real-time, 383. We can come back and revisit 376, 374. Let me see some gaps on the downside on the Qs. This would be a big gap from over here. Lows at 375.50. Fill that gap at 373. It's very possible that, if we don't catch a bid today, that this thing just continues to flush. But I could see the market kind of desperately working its way back up. Just, there's a high, there's a low. Think about that evening star. Decision bullish, indecision, decision bearish. Instead of having that immediate follow through, the market just might pull back and retest. But if we force lower highs, I think the Fed still brings a little bit of pain, at least in the messaging next week. The Fed's message is not going to be dovish. It's not. The CME watch tool is like 99% baked in that rate hike is coming. This tool has not been incorrect since 2009. There have been no surprises from the Fed as far as what they're doing the day of FOMC since 2009. Okay, and that was probably because this tool was fresh off the street, and this was Ben Bernanke's period, 2008, 2009, great financial crisis. But now we have 14 years of quote transparency from the Fed, where this is pretty much what the market does. Don't fight the Fed, as they say, right? All right. So dollar index good. Let's go to oil. Oil still catching here 76. A push higher towards 77.50. This could be, again, dollar weakness. We could spur on energy, commodities, and oil. Dollar strength, we pull right back into these range lows and we retest 65 or 67.50. So, we're coming into next week with a big question mark is what is the dollar going to do, and then what assets are affected by it? A lot of assets are affected by it. It's just what direction are we going to trade? Okay, so that's what I'm watching for on oil for next week. We'll talk about that all in the trading rooms, of course. Dollar index, we did. Oil, we did. Let's go gold and silver. Gold is retreating off this yellow zone that I talked about for the last couple of weeks. I expected gold to get to that yellow zone off the 200 EMA. It did. Now I'm expecting a little bit of a retreat. And like I said, dollar strength, dollar weakness. Dollar strength, dollar weakness. Dollar strength, gold goes down. Dollar weakness, gold goes up. I still think gold is limited to the upside. I think that gold from this high low, this is a flat pattern. I think gold's going to head lower. So to me, I mean, US dollar index, if we get back above 102 on the DXY, I think the dollar is going to catch some bid, at least for maybe the short term. I don't know. Again, I'm kind of looking at what would the messaging be for the Fed to, really disrupt the markets. Obviously, if they come out swinging with like, hey, we're thinking of one more rate hike by the end of the year, I mean, we'll see this watch tool change. But right now, it's rate hike in July, pause, 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 all the way through March of 2024. That would be when the Fed potentially starts cutting. Now, obviously, if something breaks before that, they could start cutting prematurely, and this tool will change to reflect that. But it's pause, higher for longer. Messaging is not going to change. Fed speakers literally are saying pretty much the same thing, but we have some stragglers every now and then where it's like, we've done enough, and then others are like, we haven't done enough. So leave it to the 12 Fed speakers to just confuse everybody. That's kind of their job. Keep it vague, keep it uncertain. But Powell's really the, kind of the leader of the pack, and his messaging during these FOMCs is pretty consistent. The guy has not delivered a good message to the market in a long time. Even with a 30+% rally, and big recovery rallies in 2023, he's still, jawboning the inflation. Okay. All right. That's gold. Silver. Silver still looks good to me, bullish. Just getting some pullbacks as expected. I like where we're at though. I mean, any dips, if I can get back to 2350 or 2250, all right, I'll say 23 or 2250. I'm still looking to buy silver. I'm looking for silver to get up towards $28.50 to $29. SLV, we're at 22.67. I think we had a 23 by 22 that we took profit on this week. We're still long on the overall. We're still long on the overall stock. My break even's like 17. And I'm protected on this position as well. So if we have downside, I want to be protected. We do have a lot of demand down here, but I still like where silver is going back up to highs at 20. This is SLV, but $26 to $27 upside. Stock wise, pullback, but we have some pretty good energy plays. We've had, trying to think, like XOM's hanging in there, Chevron, CVX, energy companies hanging in there. Big range trade right there. Alcoa, we've had some interest in, down to 32.94. We're going to see if this level holds. We might have some more pain ahead if it's dollar strength, then we're going to have probably some risk off trading. Alcoa will come down a little bit more. Energy commodity comes down a little bit more. Alcoa is aluminum play. FCX is a copper play. FCX had earnings this week, I believe, and their earnings came in. So missed on earnings. This is the EPS, and they beat on revenue. So kind of a mix, but we're hanging right there at 41. We have some credit spreads we staggered in. I told traders this week in the Equities on Demand room, if FCX did us a favor and came down into the low 30s, I'd start repositioning more credit spreads down here. I still like the stock overall. We're sitting in the midpoint. We need to be mindful of this because if and when this breaks, there is a lot of upside here in FCX. But we could also come back down, retest lows around 34. We might take a couple of stabs there. If it comes even lower, we'll load up down here. But if we just range trade, we can get some positions and have some profit. Other than that, we have a lot of good profits running this week. I'll go into let me go EOD notes. Actually, let's go Equities on Demand. Screen is blurry. Check your settings in YouTube. Check your settings and make sure it's not on auto. If you want to I'm broadcasting in HD, so you can go to like 720 resolution, or I think I've been pushing like 1080. So just double check your settings for YouTube. Here is the 721 expirations. We had quite a few of these. So we had 26 expirations. Most of these have already been managed. Bank of America, full profit on it this week, most likely. KHC, we're holding and repairing some of that stock. KDP doing the same thing. Alcoa, if we're in this one here, that was a broker assignment. I'm holding that. I've got a covered call at 38. I'm just going to sit on Alcoa a little bit longer. To me, this is a $70 stock. So I'm willing to hang on to this one for, the next 6 to 12 months. IWM, that's a bear call spread we took a stab on. It was a $2 spread. We collected 80% of that, so it's a small loss if we take it, which we will. IP is still a good one. If we lose on this, we're going to take. Actually, we close it out for profit. Never mind. We have some staggered credit spreads, and that went out to the rest of the year. KDP owning and repairing. Both of those KHC, KDP, LTHM is in full profit. We're going to let that one expire for full profit. SLV was in profit this week. We closed for break even or better. SoFi full profit. Honda Motors never got filled. CMCSA profit. NCLH profit. LTHM again profit. Johnson & Johnson never got filled for us. Even though Johnson & Johnson had a huge day yesterday, lifting the entire healthcare sector. SoFi, that 9x8 we took profit on. AT&T, 20x19s we lost on, but we do have some reestablished credit spreads around $16. That's also an 8% dividend at 30-year lows, so I'm going to stick with AT&T a little bit longer. Intel, full profit on a bunch of credit spreads. KHC is repaired. KDP is good. CCL, full profit. BSAC, this one ran. We're up to $21, and I'm just going to let this run towards $22.50 to $25. I have the stock. I haven't covered it yet because the premiums are kind of garbage. But I'm up like I think I'm up like $4 a share right now. I'm just going to let it run. So this was a credit spread. I just bought the shares, but I did some credit spreads to add to it to lower my cost. I took some losses on credit spreads, but I still own the shares around $17. USO, this one's in profit, 67x66 and the 66x65. And snaps we already managed. So I just went through the entire list right there. Probably 80+% of our trades for this week, this week's expirations are profit, which is pretty nice. Okay. Gary says I had to reload. All right. Everybody good? Mason, this is your question on Euro New Zealand. Let me take a look. So a bot, no. I'm not buying Euro New Zealand, no. Here's why. If this just goes right up to these highs again, I would look for a short-term rejection. I talked about this week in the flex room. If we reject off of 8,000 right here, I'm looking for that. Now, I hope it's more than that. If I'm going to take a sell trade on a smaller time frame, I want to see it come all the way back down to this low. Okay, so 8,000 is going to be a tricky spot. I'm at this time of the season in July, I'm not looking for a breakout. Okay, I know we have the ECB next week, but I wouldn't be surprised if we have something like this. Right? I mean, if everyone's expecting to see dollar strength, which would make sense technically, that means euro gets a little bit weaker. Euro could also get weaker on a mixed message from the ECB. Maybe they're not going to be super hawkish. Maybe they're just going to raise rates kind of by necessity. Could be like considered a dovish hike, if you will. I could see the Euro New Zealand rejecting and coming back down to retest these lows. So I'm not buying Euro New Zealand, no. I'm going to look on a 15 or 30 minute time frame, confirm something bearish, stop loss above, probably short it. That's what I talked about in Flex this week. All right. So hopefully it doesn't burst your bubble there, but I'm not long. If you are long, hopefully you're long here and you're already at break even. Because if it breaks out and goes, then sure, it has room to run, but I wouldn't want to be buying it at this high. No way. So I'm looking to see if it rejects and stays in a range. It's still summer trading. Still summer trading. All right. We can run through some currency pairs. I only have a couple of minutes. Any questions? Any questions? JPY pair, Swiss, Nimmer, is that you? Yeah, JPY pairs. So, again, be careful on the JPY because next week we have BOJ on right off the back of the Fed, right? Fed's on Wednesday, ECB on Thursday. Thursday to Friday's the BOJ. I just think the easiest way to trade the yen is stick with the short-term stuff. Stick with the short-term stuff. Don't position trade it. Swiss yen is at these crazy 20, 30-year highs. But here's my thought. I mean, we've got great divergence on the daily time frame, but I'm hoping that nobody's calling or guessing where the top is. Because one of the most stubborn things that happens is JPYs just run. And I think the easiest trade is when this breaks this low or this trend line, this is a great sell trade. But if this doesn't confirm this trend line break, I am not touching these shorts. Okay? So I want to see it take out this low. I want to see it get on the right-hand side of the trend line. And then there's swing after we could easily have 5 waves. Right? 1, 2, 3, 4, 5. And that could get us back to 149. We can come all the way back into here towards 142.50. There's 1 to 2,000 pips of opportunity. But the difference is if I guess now and it goes up to 170 or 180 or who the heck knows, that's just a trade that's going to drive yourself crazy. So I am patiently waiting for when it confirms, I'll start looking over here and then trading. And I'll just stick with more short-term alignments. Okay, break even 152. All right. Well, I mean, hopefully you've got, I mean, typically the way you trade, you've got some fire in the tank, right? So if you have some ammunition still, I would just wait for, wait for this. I think the hardest part is averaging in here. I see the technicals. It makes sense. If you want to take some stabs at this, maybe a sell stop, because if price just keeps going higher, you can just adjust that sell stop, but you're not necessarily just throwing in trades. But I think the best trade is just wait for confirmation. I know it's hard, especially with a break even lower because you're scaling into it. But I can say this with experience in the Japanese yen pairs, the easiest trade is confirmation. When we break this trend line, this thing might fall 2,000 pips, right? And then it's just a matter of did I get the trade? Did I follow through the pattern? And did I stick to my plan? But the hard part is where's that top? Because who the heck knows? And the BOJ coming off of the basically piggybacking off the Fed on Wednesday, I don't know what they're going to do. I mean, the Japanese yen, if you look at the 10-year bond, so the 10-year bond yield, oops, I typed that in wrong. So we're sitting at 0.439. And, I don't know if they come out and mess around with this. I think the Japan, the economy, the Bank of Japan might want to see higher Nikkei 225 and finally get back to that 1989, 1990 top that they haven't seen in 30 plus years. To do that, they'll weaken the yen. I don't think their policy is going to change, right? So, I mean, the message I saw headline wise is like, we don't want to see major FX movements, which means they're probably not going to change their rate. So they're still going to be at negative zero point 0.1. If we have a higher volatility environment, then the Japanese yen can gain some strength because it happens faster. But if we're in a lower volatility environment, it's going to favor carry trade, which is essentially every currency pair against the yen. You know, so I just say we got to be careful on the yen crosses. BOJ might have some wild stuff up their sleeve. Certainly last year there was with crazy weakness and then 3 levels of intervention. It was a wild year, right? So okay. Let's see. I think that's going to wrap it up. I got to go into equities on demand now. Real quick, I'll just post this one more time for the group chat. If you want to come in, you can check out all the channels here, but it's free to communicate with everyone if you go into the group chat here. I will do this. So invite again. This doesn't expire. Copy. Throw this in. So this is my Discord channel. I'll post it again. Feel free to join. Come on in. Say hi. This is welcome for all traders. Trading, investing, stocks, options, futures, forex, cryptos, whatever you want to talk about, all good. Ask me questions. I'm here to help, right? I'm just looking to build this community, bring all my content into one space. This makes my job a lot easier. Okay, I've been able to post a lot more content just having it here. Kind of gives me a nice central location. So I appreciate everyone joining and jumping in here. And for those of you watching, if you do me a favor before you go, hit the thumbs up button for me, like the video and stuff. And if you're not subscribed to the YouTube channel, do it. Subscribe, click that notification bell so you get the live updates. And check out the video library. Check out the Trading 101 video series. I think there's like 60 plus videos out there with just good value lessons on trading any asset class. And there's certainly more I can do. If you request it, throw it in here in the Discord, in the group chat, ask for some subject matter, and I will do what I can to add some more content. Okay. All right. Thanks a lot, and enjoy the rest of your day. Enjoy your Friday. Happy weekend. I'll be back on Monday. And Equities on Demand students, I will see you in just a few minutes. And then also we have class today on Pockets Pattern Pro. We have a big launch next week. I've got a course called Delta Trader coming out for some short-term options trading. I've been talking about it quite a bit in my Equities on Demand trading room. It's pretty amazing. I mean, yesterday literally it was a trade that was I'm trying to think. I got out with around 250% gain on my position, and I think it ran up to 6, almost 7. It almost was a 700% gain yesterday. I tracking it, but I was out. I was out at 2.5. That's what I needed. That's what I wanted. That was my limit. But man, letting those profits run sometimes is just crazy. So exciting stuff. I'll teach you how to do it. So, all right, I'll let you go. I'll see you in the trading room in the next few minutes. And everyone here on YouTube, have a great weekend. I'll see you Monday. Bye.